Welcome back to Alpine Expat. If you're considering moving to Switzerland, already living here, or planning to stay long-term, there's one topic that deserves your attention long before retirement: the Swiss pension system. Switzerland consistently ranks among the world's most financially secure countries, and one major reason is its unique retirement framework. Unlike many nations that rely primarily on government pensions, Switzerland spreads retirement income across multiple sources, creating a system designed to provide both stability and personal responsibility. But understanding how it all works can be confusing, especially for expats. What are the famous three pillars? How much money can you expect to receive when you retire? Can you retire comfortably in Switzerland? And what happens if you've only worked in Switzerland for part of your career? In this video, we'll break down the Swiss pension system in simple terms and explain what you need to know to prepare. Understanding your pension rights early can prevent costly mistakes later. The Swiss retirement system is built around a simple principle: retirement income should not depend entirely on one source. Instead of relying exclusively on government pensions, Switzerland combines state benefits, occupational pensions, and private savings. This structure is known as the three-pillar system. The idea is straightforward. The first pillar provides a basic safety net. The second pillar helps maintain your standard of living after retirement. The third pillar allows individuals to supplement their retirement income through private savings. Together, these three pillars aim to ensure financial security in old age while encouraging personal responsibility. For many newcomers, this balanced approach is one of the most attractive aspects of Swiss financial planning. The first pillar is known as AHV in German, AVS in French, and OASI in English. This is Switzerland's state pension system. Its primary purpose is to guarantee a minimum level of income during retirement. Every person living or working in Switzerland contributes to the system through payroll deductions and other contributions. The money collected from today's workers is used to pay today's retirees. This is known as a pay-as-you-go system. To receive a full pension, individuals generally need to have contributed continuously throughout their working lives. The retirement age is currently 65 for men and is being gradually aligned to 65 for women as well. The amount you receive depends largely on your average lifetime income and the number of years you contributed. For someone with a complete contribution history, the maximum monthly AHB pension is currently a little over 2,500 Swiss francs per month, while married couples are subject to a combined maximum pension limit. For most retirees, the first pillar alone is not enough to maintain their previous lifestyle. That's where the second pillar becomes essential. The second pillar is called the Occupational Pension System, or BVG in German. If you are employed and earn above a minimum salary threshold, both you and your employer contribute to this pension fund. Unlike the first pillar, these contributions are invested and accumulated in your individual retirement account. Throughout your career, money builds up in your pension fund. By the time you retire, this accumulated capital can be converted into a pension income or, in some cases, partially withdrawn as a lump sum. The second pillar is specifically designed to work together with the first pillar. The goal is that the combination of pillars 1 and 2 should replace approximately 60% of your pre-retirement income. For example, someone earning 100,000 Swiss francs per year during their career might receive roughly 60,000 francs annually in retirement income from the first and second pillars combined. Actual outcomes vary significantly depending on salary, contribution history, pension fund performance, and retirement decisions. For many middle-income and higher-income earners, the second pillar becomes the largest source of retirement income. The third pillar consists of voluntary private savings. This pillar is particularly important for expats, entrepreneurs, higher income earners, and anyone seeking additional retirement security. The most popular option is known as Pillar 3A. Contributions to Pillar 3A enjoy significant tax advantages. Each year, eligible residents can contribute up to a government-defined maximum amount and deduct those contributions from their taxable income. Over decades, this can generate substantial tax savings while building retirement wealth. The funds. are typically invested through banks, insurance companies, or investment platforms. Many people choose investment-based Pillar 3A accounts that allow their money to grow through stock market investments over the long term. There is also Pillar 3B, which includes other forms of private savings and investments without the same tax benefits. For many Swiss residents, Pillar 3A plays a crucial role in closing any retirement income gap. One of the most common questions people ask is simple: how much money will I actually receive? The answer depends on several factors. For someone who spent an entire career in Switzerland with average earnings, the combination of AHV and occupational pension benefits often provides a reasonably comfortable retirement. However, Switzerland is also an expensive country. Housing, healthcare premiums, food, and other living expenses can consume a significant portion of retirement income. As a result, many financial experts recommend actively contributing to Pillar 3A throughout your working life. A retiree relying only on the first pillar may face financial challenges. Someone benefiting from all three pillars generally enjoys much greater financial flexibility and security. The exact amount varies dramatically from person to person, making retirement planning essential. Special considerations for expats. Expats often have unique questions about the pension system. What happens if you leave Switzerland before retirement? In many cases, your first pillar contributions remain recorded and may generate future pension benefits depending on international agreements and your circumstances. Second pillar assets can often be transferred, preserved in vested benefit accounts, or partially withdrawn when leaving Switzerland, depending on where you relocate. For citizens of EU and EFTA countries, coordination agreements often simplify pension rights across borders. Because pension regulations can be complex, expats should seek personalized advice before making major relocation decisions. Understanding your pension rights early can prevent costly mistakes later. Challenges facing the Swiss pension system. Like many developed countries, Switzerland faces demographic challenges. People are living longer, and birth rates remain relatively low. As a result, fewer workers are supporting a growing retiree population. This creates pressure on the first pillar system and has led to ongoing political discussions about retirement age, contribution levels, and pension reforms. The Swiss government regularly evaluates measures to maintain the long-term sustainability of the pension system. Fortunately, the three-pillar approach provides more resilience than systems that depend entirely on government funding. Nevertheless, retirement planning is becoming increasingly important for future generations. The Swiss pension system is often considered one of the strongest retirement frameworks in the world. Its strength comes from diversification. The first pillar provides a foundation. The second pillar helps preserve your standard of living. The third pillar gives you the opportunity to build additional wealth and improve your financial future. For expats and Swiss citizens alike, understanding these three pillars is one of the most important financial steps you can take. The earlier you start planning, the more options you'll have when retirement eventually arrives. Whether retirement is 5 years away or 30 years away, learning how the Swiss pension system works today can make a tremendous difference tomorrow. Thank you for watching Alpine Expat. If you found this video useful, please like, subscribe, and share it with anyone considering a move to Switzerland or planning their financial future here. We'll see you in the next video.